Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading.
What is an ISE FX option? Okay, an ISE FX option provides investors with exposure to rate movements in the global foreign currency market. So basically it gives you a way to participate in what I call the arbitrage of money around the world. It allows you to be able to lay off risk as well as speculate, which is the nature of every market that you're going to trade, and it's a wonderful thing that ISE has done right here. They're exchange listed, and they can be easily accessed through your options-enabled brokerage accounts. And I think that there's a list of accounts. If you go to their website, they've got you can go to the site map. You can go on there and find out the different brokers that allow you to trade these options. What are the advantages? The advantages of them, they're U.S. dollar based as the underlying value. I know a lot of people, this has always been confusing for, say, people in general practice versus people in the industry. In general practice, you think of everything based on the dollar. Well, in the industry, you think of everything based on what the currency's doing. For example, I can remember a couple years back, I was up in Canada, and the Canadians at the time had a rising currency, and we had a declining currency. And one of the questions were, and we were getting ready to make our offer on our educational package, would we take Canadian dollars? And I remember thinking to myself first, before I answered the question, is the Canadian dollar rising or is it declining? At the time, it was about 80, and at the time, I had projected it to go to par. And I said, sure, I'll take Canadian dollars. I'll never forget that. We sold our package for really 80 cents on the dollar at the time, and within a short 6 to 9 months later, by taking the Canadian dollars, we'd made an extra 20% over the actual exchange special at the show. So it was a pretty good deal because I knew currencies. And knowing currencies will come in handy to you if you'll understand the movement of the worldwide currency market. I'm going to talk about a little bit about that as we get further in this presentation. But knowing currencies can help you in your day-to-day dealings, especially if you're doing travel outside the United States. The ISE options are similar to a conventional option. One contract for 100 shares is the way it works. It allows you manage the risk in the FX marketplace. They're tradable in a conventional trading account. What that means, you don't need any special type account to trade these options. And most of them are simple strategies. The one disclaimer is there's no covered call writing in this market. It's a one trade. All values are settled in U.S. dollars, and there's no need for currency conversion, and there's no extra commission for the same trade. Let me give you an example of what they're talking about there. I trade the European DAX market, and when I make money in the DAX market, I get paid in euros. Well, when I convert those euros to U.S. dollars, there's a fee that I pay in conversion. The same thing happens to you, say, if you were traveling overseas and you were up in Atlanta, Georgia, for example, and you said, I want to get some European currency. Well, if you go to one of those exchange-traded stands, and you would find out there's a big spread between what your dollar's worth and what they'll give you in euros. And so that's a big advantage when you don't have that conversion, because you don't have that I call it gap between $1 to the next. Now, one of the advantages that we've seen here at the school and talking and strategizing is around key dates. Now, you might write this date down. It's one FOMC meeting later is December the 16th. It's the next one. And that will be a big meeting. And by the way, if you want to, you'll be invited into that trade. We always do a live trade on that day, and that will happen there in the Fed market. and write this down while I'm thinking about it. Just send an email to Silas at DTI Trader to make sure you get on that invitation list for the next Fed trade, we call it. Now, December 4th, the Bank of England and European Central Bank will announce rates. There will be some shakeup in the markets then. If you look at the schedule and you look at where we're at, you'll see that it's pretty interesting. So December 4th, we got another little shakeup coming in the currency market. All right, like we said, the currency is known as the euro, EUR, and the ISE symbol is EUI. Now, we use a lot of data feeds here at DTI. One that we use is DTN, and today it was fun to, put that in there and watch it trade alongside the dollar and the euro and the British pound and other things, just to watch everything trade. But it's really interesting how in your mind all these years you've done it the other way and you look at it this way, so it gets confusing sometimes. But you just got to keep one thing simple. Think in terms of the dollar when you're trading these markets. All right, now the ECB, the current key rate's at 3.25. They look to cut the rate to about 3. A rise in rates would reflect inflationary concerns. A drop in rates would be needed to stimulate the spending. Notice that in this global economy right now, we've got a world that's sort of shaken up, and you've got all the world involved in the current market turmoil. And therefore, you've seen a lot of stimulus, and you've seen a lot of things going on around the globe to keep this this baby together, because it seems to me like you have a whole bunch of stimulus, and you have a whole bunch of settling, then you have more down action in the general markets. And the reason you do is because you're having delevering going on around the globe. And I might have a little time to talk about that if we get through with the presentation. All right, so the ECB, could drive the euros. If interest rates rise, the value of the currency is expected to rise. Well, if the euro rises, the dollar goes down. Now, a position in the EUI could take advantage of that possible move. And so I think what you got to do is think in these terms. What is the euro going to do relative to the U.S. dollar? Right now, we've had a rising dollar, and that surprised many people in this market turmoil. You're saying, well, why is the dollar rising when other currencies are declining? Well, I want to explain that a little bit. If you think about the world economy, and you think about the U.S. economy in particular compared to the other countries that make up the so-called world economy, economically, as bad as it is here right now, and it is bad, I don't want to minimize that, but we're still better than the majority of the other countries out there in the state they're in. Why are we better? Well, first of all, we have a stronger and a more balanced economic system than most of the countries that we're in competition with. We're further developed, especially against the emerging countries, and so you have a lot of things that end up making our dollar rise during these periods of what we call market turmoil. And it's risen quite a bit from the lows of 4 or 5 months ago. So I think it's interesting to watch. The question is it going to continue to rise, or will there some settling here? I can tell you this. Currently, I am short the euro dollar because I do think the euro dollar will decline. And that's a long-term play. It's not going to happen overnight, but I think you will see the euro dollar come back down to par at some point. How do I know that? I look at the other currencies that have pulled back, and you can see that happening in them, and it's a general weakening of the world currencies outside the U.S., and I think that's the general trend right now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.